A few weeks ago, I got on CrowdStreet's annual call-in for investment themes for 2022, and they were talking about their best places to invest and really kind of those themes. One of the things that I thought was interesting and is how they're democratizing private equity real estate to the individual investor. And I think one of the big misnomers about, some of those real estate platforms is that there's this fiduciary responsibility to the end investor to have these super high quality sponsors on the platform. And the reality is they're not liable. Like, they're a platform. Yeah. It's like, Charles Schwab offering a stock or a security. Yeah, they've done all the requirements to get it listed as a stock, but are they high quality? And I'm on there going through the group chat questions. And one of the things I found very interesting was that some of these sponsors who committed to having these quarterly calls were unreachable. And I just found that really, really interesting because they're almost kind of coming out and saying, hey, we've got this validation of great sponsors. Here's where I'm going. It feels like with all of these different platforms out there and private equity real estate becoming more democratized to the individual investor, how many bad deals are we going to start to see here? Now, folks have been bailed out. Rob mentioned this, where you're able to pay back these investors through refinancing. Well, guess what? That trade is over, okay? Because you're not going to refinance at a higher rate. Maybe you do because there's enough equity and meat on the bone to do that, but that's going to cut into the margins and make things more challenging. And there's something called beta creep, and that's when you start looking at riskier investments or riskier sponsors. Any insight from Tom or Rob on what we possibly could see and maybe investors need to kind of be wary about?
Yeah, I'll let Rob go first as our guest.
Well, I would actually say, Mitch, I applaud you for, being a registered investment advisor. You are actually holding yourself out as a fiduciary level to help somebody. And you've got your fancy MIT designation and all the other stuff that you've done from an education standpoint. This is one of those where people have kind of said, it's a do-it-yourselfer type thing. And if you're going to spend the time to do it, you can. But, we saw that with day trading too, how that turned out, right? So, I think we're seeing a shift right now. And it will happen when you have a massive shift from people going out of the stock market into alternatives such as real estate, which is happening right now. When the wirehouses, the Morgan Stanleys and the Merrill Lynches of the world start selling private real estate, which is happening today through shops like iCapital and others, then you're seeing a wholesale shift. And when you're seeing that, every Tom, Dick, and Harry that wants to get in the business is going to get in the business, and you're going to have these issues that you're going to see. Tom kind of alluded to it earlier, and I fully agree with that. You're going to have a weed out period, and you don't want to be one of those people that got stuck in the weed out, right? And so I'm a big fan of somebody working with people that will help them navigate this space. The space is going to get a little bit more confusing the more people that jump in it.
Just add to that, Mitch and Robin, I'm always a fan of exposing the benefits of, a variety of assets to the broad market. This is one of them, right? It's a really strong asset class to put your money into if you're with the right operator. At least this is my opinion, right? Again, the right operator. CrowdStreet is a platform. They collect money on transaction fees. I don't know their process of doing vetting of these operators. And my guess is they're on the platform because their cost of capital is 8-10%. Well, most equity that I'm getting is between 16 to 20% plus, right? My cost of debt ranges between 6 to 10%. So it's a way for me and others to get cheaper capital by the retail investor that doesn't know any better. And so they're already kind of targeting the more novice investor. Fine, they get exposure. But this goes back to my earlier point. When you have a frothy margin sort of segment of business, you're going to have a lot of sharks in the water. And those sharks might not be experienced, or they might be. And you have to do your own research with the helps of like the RAs, like Mitch of the world, to help you navigate that. And to Rob's point, doing it on your own is one thing, but really vet the operator and their track record.
That's perfect. That's exactly kind of what I wanted to hear. Thank you. I definitely saw a need for that. I don't know where that's going to go, and certainly kind of working on a few more letters after my name to kind of legitimize bring that fiduciary standard, Rob, that we saw in our world on the publicly traded security side that really doesn't exist in this space yet. You're starting to see it. And I think it's going to become more important as we start to see that weed out period, as you mentioned. It won't hurt until it does. And when it does, it's going to burn a lot of people. And so, not just throwing anything that you see out there, getting back to CrowdStreet, one of the things I've had an opportunity, and I'm not bad mouthing them because I think they do a lot of great things, but one of the things that they're looking to do is build out that distribution to the RIA channel. And so as they create more relationships there, and they've got, this massive amount of supply, and now they've got the demand on the appetite for these RIAs and ultimately clients of RIAs, what happens when that supply and demand meet? Well, now they need more supply. And so ultimately, you're going to start seeing that beta creep. That's what concerns me for all of these different platforms out there. We're just going to start seeing deals that are more risky or just overvalued. And I don't know. I'm reading a book right now by Ray Dalio, Changing of the World Order. I highly recommend it. It really talks about how we've been printing money over the last 10 years. The amount of inflation that we've seen, people are like, oh yeah, well, it's only certain items. No, inflation's here, people. It's here. And for the folks that are building, Rob, Tom, myself included, anybody, you're seeing the cost of commodities. So how do you protect yourself from inflation? Well, it's investing in those assets, real assets that are great inflation hedges. And so I think, real estate is definitely one of those spaces. We talk about the stock market, yeah, but I don't know, man. Everything feels frothy to me. I don't know. I'm worried. I don't know if you guys have read that book or not, but I would recommend. I'd love to hear what you guys think about what that does.
I've heard a lot of good things about that book. Actually, I haven't read it yet. I'd like to end on one key point here. If CrowdStreet goes to the RIA space, or I mentioned our capital case is another one. That there's a lot of people going into this space, right? There's a new one out there. Northern Trust actually is about to launch into the advisor space. So you're seeing more and more of this on the private deal side. But here's what people need to understand. It doesn't mean the RIA knows the business. There's a big difference. And Mitch, you and I saw this in our last career. You'll have people that are really good at stocks. You'll have people that are really good at options, or you'll have people that are really good at ABC, whatever it is. The same is true here in real estate. This is a very unique asset class. You have to find somebody who's going to help you navigate the real estate space. And that's why I was applauding you earlier for digging deep into this, because what is it? A jack of all trades, an expert in nothing, right? That is a very true thing. And there's value in how you can have a real estate advisor help you dig deep and understand this space for that piece of your wealth. Because this is going to become part of your asset allocation. If you just look at the numbers, it's happening in a large fashion across the country. You've got to find somebody, unless you are skilled enough to do this yourself, you've got to find somebody where this is a specialty for them. And that's a problem, because these due diligence officers have readily admitted that their teams, because I go listen to these kind of things, are not equipped.
Let me ask you this as we wrap up here. What can investors expect from BV Capital in 2022? Tell us a few things without going into full detail, but give us some ideas of some of the up and coming opportunities you guys have.
Yeah, I appreciate that. We're going to have a lot of development, a lot of multifamily. To Tom's point, we've even toyed with looking at infrastructure funding for suburban neighborhoods. If you look at the macro trends, we've got to get housing, right? We still love industrial, and we're actually going to build an office building, believe it or not, because of that zero vacancy I talked about. So vacation home is still an interesting spot. Anywhere that you can take something that's in demand and produce it in a time frame with good financing, you're going to do well. And so you're going to see a lot of ground up construction or lot development or things of this nature, to where we can take advantage of the macro trends, solve a problem, and make investors good money in the process.